So without further ado, ladies and gentlemen, let me introduce you the speaker for today, Miss Elisa Ng. Now, after graduating from NUS with a Bachelor of Social Sciences with honors in economics, Elisa worked as a research analyst with Franklin Templeton. She started her real estate career in 2007 and was consistently among the top 1% achievers in Huttons before taking on the role of Director of Project Sales and Marketing last year. Elisa is also an established top speaker and trainer with a strong passion in the analysis of property market trends. And she's also a savvy investor herself, having started when she was 26, and she's currently rebuilding her own semi-D. All right, so her topic this afternoon is top real estate mistakes you must avoid. So, ladies and gentlemen, let's welcome Miss Elisa Ng. Over to you, Elisa.
Okay, hi everyone, and thanks so much, PK, for the wonderful intro. And a very good afternoon to all who are tuning in today. It's my honor to be able to share on the top real estate mistakes that you must avoid. Okay, give me a minute while I start my video. Okay, so can everyone see me and hear me loud and clear? Okay, I have lots to share, so without further ado, I'll dive right in. And a little bit on what I'll be touching on today, besides my main topic on identifying some top real estate mistakes that in this line of 13 years, we have seen some of the very commonly done mistakes in real estate. And this is what I'm trying to navigate on and to identify on these mistakes that you must and should avoid. Okay, before I start on that, I'll be touching on some hot topics that I would like to address before we go into the main topic. Okay, so let me go into the next slide. Okay, so take a minute to read through the disclaimer. Okay, basically it just means to say that everybody has different opinions. Okay, what I'll be sharing today will be a lot of facts and stats, and also some of my own personal opinions and advice. So we may have differing opinions, but I hope that by attending today's session, it will help you in making your real estate decision. Okay? Okay. Okay, I'll be sharing a few articles that I think there have been many articles on how COVID has impacted our property market, different views and perspectives from different analysts. You know, I will pick a few that I feel are more interesting. And of course, any questions that you may have, you can post into the chat. We will look into it later. If not, you can also look for your Huttons agent who has invited you today, because we have many things to share about opportunities and, you know, interesting facts to know about in making a decision whether to buy now, okay, or whether it's a good time to buy and what are the good buys in the market. Okay, so this article itself, okay, I think it gives a very good, insightful brief on the cooling measures, sparing our property market greater pain. Okay, take a look at some of the extracts from this article. Okay, this article itself actually lets us know that previously, when we had a few crises that we faced, the market then versus the market that we have now, okay, it's actually very different. If you take a look, there was actually exuberance before the financial crisis. In other words, there was very high speculation. Okay, if you notice, this is something very interesting. Within a span of 2 years period, from 05 to 07, prices actually risen by 49%. Okay, that was a very sharp increase. Okay, and this was due to the fact that was little deterrence against short-term speculation in real estate. Okay, so there were little flood barriers. Okay, and this really caused a speculation in the real estate which is why government came in. Okay, with cooling measures to stabilize the market. So in other words, our market today, okay, is very grounded. There are very strong economic fundamentals and measures in place to really give better resilience to our real estate, Singapore real estate. And I think that is very good and encouraging that our government has in fact made Singapore property, even in a crisis like COVID-19, I would say one of the most attractive that you can see in the global market. That our real estate is still a very attractive asset despite any crisis it may face because of the resilience and the very strong economic fundamentals that we have in our country. Okay, so take a look at the some of the extracts here as well. Okay, from the end of 2011 to 2019, household net worth actually grew by 57% versus the value of homes that grew only 29%. Okay, so it was in stark contrast to the 2-year 49% price increase. And over here, today, we're looking at over a span of 8 years, it grew by just 29%. Okay, so in fact, another interesting thing to take note of is that total cash actually surged by 72% and CPF soared by 105%, with households saving much more than before. Okay, so this actually shows an increased liquidity in the market. Okay, another perspective would be to see that without these cooling measures, okay, which stabilized the market, home prices would have easily been 18 to 22% higher than what it is right now. Okay, so with this in mind, I'll move on to another interesting article, and I think this is something on people's mind because with COVID-19, people are thinking whether there will be, distress sales. Is that going to see property transactions hitting new lows, and what type of price adjustments or market expectations on the price that we may be having? So let's take a look to explore a bit more into this. Okay, as you can see from this article from Business Times, with more mortgaging listings going under the hammer, there are no distress sales as of now, okay, because banks are still holding back and giving borrowers more time, so there are some relief measures, okay. Many people have deferred their mortgage repayments, with mortgage relief measures coming in to last till the end of 2020, okay. So this is kind of to help minimize the impact that COVID has in the market itself, okay. And if you take a look, it also shows that the drop is expected to be rather gentle, okay, mild, given the packages that have been implemented by the government. As a result, homeowners would not be anxious to liquidate their assets at a lower price, as the packages will tide them, most of them, over this crisis. So I think this statement is quite important because we really only start to see, a realized price drop when transactions are starting to come in at lower than normal prices. But as you see here, there is a lot of stability as well as resilience in this aspect. Okay. Another interesting quote was that buyers will grab, okay, if prices drop 5 to 8% from banks' valuation. So this also means to say that if buyers see a drop of 5 to 8%, they will feel that they should rush in to buy and grab because it is a good deal for them. Okay, so from this article, it shows that although we are expecting perhaps, distress sales, we're expecting maybe some people are looking at perhaps there will be a sharp price adjustment, but that is not exactly what we're seeing in the market as of right now. Okay, so in other words, the impact of COVID-19 is seeing quite a mild impact on the property prices as of now. Okay, I would like to go into this LUV trajectory. People have been talking about, how is the curve going to be like? How is the recovery going to be like? And this is a summary by UOB that I think is quite clear. Okay, so there is some predictions and forecasts that different analysts have, and one being that there will be a V-shaped recovery, okay, for the economic recovery. V-shaped meaning there's a very sharp recovery, okay. They don't foresee this being likely with just a 20% probability. They are looking at forecasting this scenario if there is containment of COVID-19 by the end of this year, okay, we're by the end of the second quarter, okay, we're already to the second quarter and 1.5 months to go. Okay, I myself think perhaps a little bit more unlikely, okay, for this scenario. Got chance, but perhaps more unlikely. Okay, so in terms of the global economy, it will be looking at a recession in the first half, a rebound in the second half, and growth still being positive but lower than 2.9% than what was achieved in 2019. Okay, and then we move on to the U-shaped. Okay, they do foresee this as being a very good chance of occurring with a 5% probability, containment being end of this year. Okay, this would see a sharp technical recession in the first half, recovery in second half, but not strong enough. Okay, and global economy recording a full year contraction this year. Okay, maybe after I share the three scenarios, I will share my own take of where I think it would be. Okay, and then we move on to the L shape. This is more recessionary. It's the worst scenario, and it means that containment may be only perhaps looking at sometime end of next year. Okay, there will be a deep recession for a full year, demand destruction, prolonged financial stress environment. Okay, for myself, I'm quite hopeful. Okay, I'm quite hopeful that it's actually in between the V and U shape. Okay. Okay, so again, all these are predictions, all these are forecasts. I think it's good to see what analysts are projecting. Okay, and this is another graph that's quite interesting. Okay, let's take a look at Singapore itself. Okay, if you take a look at Singapore's GDP growth last year, it clocked in 0.7% GDP growth. Okay, that is if you can see my cursor, that is the light blue square over here. Okay. And the projected GDP growth this year, they're actually looking at this blue bar, which is a negative 3.5. So if you look across the globe, you notice that they are forecasting most economies to have a negative GDP growth, okay? And the next year, they are looking at a forecasted GDP growth for Singapore of 3%. So what does this mean? Okay, if they are projecting GDP growth of 3%, which is a positive growth next year, which means that you're looking at a recovery, okay, in the next year, 2021. Okay, so then that determines the question of what type of window of opportunity are we looking at? Because all of us are thinking when will be the low, okay, and then when will the rebound start? Okay, so this is something that we should have in mind, and I will be sharing a little bit more later to give some clarity, okay, on in the near term outlook. Okay, so I did have a prediction in the 2020s pre-COVID. That was before COVID actually happened. Okay, so I'll share with you this, and then post-COVID, what was the change in this prediction? Okay, and I think this is quite important because we tend to focus usually only on the here and now, and we sometimes forget on taking a broader based outlook, and this helps to put things in perspective and give us more clarity and better planning to look forward to what's going on ahead, and from there make our decisions based on this more informed decision based on this clarity. Okay, so I'm actually looking through what's going to happen in the next 10 years, okay, from 2020 to 2030. Okay, I would say that we should be expecting the general election perhaps by end of this year. It happens every 5 years, so the latest it can be would be by perhaps second quarter of next year. Likely, I would think that it would be by end of this year. So based on this assumption, okay, I'm going to plot and show you during this 10 years timeline what type of impact and what type of market movements there may be. Okay, so I think 2020 has been quite exciting. In fact, at the start of this year, the stage 1 of our Thomson East Coast line actually opened and operated, okay, the Woodland stations. Okay, and Thomson East Coast line stage 2 is looking to complete by end of this year. Okay, later on I'll show you an article. In fact, more or less you can see it's already all up. Okay, and next year, 2021, we're expecting the completion of stage 3 of the Thomson East Coast line. This will be more of the city area where you have your Orchard stations, Orchard Boulevard, your Havelock, your Great World, okay, stations coming up. Okay, and all these are very major infrastructure developments that are ongoing, that are in plans to be completed very, very soon in the near to mid-term. Okay, government has released an article before saying that they will definitely increase GST to 9% by 2025. However, I predict that they likely won't time it so close to the next election, for certain reasons, because too close to general elections, they will be on people's mind. So I predict that it could be not so soon, perhaps in 2022. Okay, not so soon and not so close to the next GE. Okay, then we're looking at the East Coast Line Stage 4 to be completed in 2023. Okay, this is more on the east, towards the East Coast side. Okay, 2024, I don't expect anything major. okay, 2025 general election, and 2026. So we are now looking more at the mid to long term. Singapore, is it going to open up to more foreigners? Okay, that's one thing which I will kind of address a bit more later. And the Jurong Region Line Stage 1 will be complete and up by then. Okay, this is interesting. Founders Memorial, the Thomson East Coastline, Coastline Station will be ready by then. Okay, the Jurong Region Line Stage 2 will also be completed and up. Okay, Founders Memorial is actually the current Marina Bay Golf Course. So it's something major that's going to happen as well. It's in the Marina Bay area, in a very prime location. So there's going to be a lot of growth and redevelopment and development plans that is already reflected in the master plan itself. Okay, major growth node to be taken note of. Okay, then in 2028, is Singapore property market finally going to heat up? Okay, that's one question. Jurong Region Line Stage 3 will also be completed and up. And in 2029, would we be looking at a possibility of new measures if the market faces overheating? Okay, and of course the CRL Stage 1 will also be completed. Okay, in 2030, okay, a few things to look out for. Okay, I think the population white paper predicted a target population of 6.5 million to 6.9 million. Okay, this was the target population, and this was also in order to achieve government's aim of maintaining a healthy GDP growth. Okay, I'll talk a bit more about that later. Okay, I think there were also numerous articles predicting that the average PSF of Singapore housing in general would be looking at 2003 to 2009 per square foot. Okay, so this is interesting because there were a few write-ups on this already predicting this year-on-year increase of 5% of more houses being averaging of 2 million. Okay, and these are articles by DBS and Morgan Stanley. Okay, so quite a few write-ups on that. And also the Thomson East Coast Line Station at Changi Airport Terminal 5 will be completed at this stage as well. So quite a lot of things happening in the 10 years period, and I thought I should take some time to share on this because it will help us in giving clarity and also to making a more accurate prediction of what's going to happen in the immediate term. Okay, with this COVID happening and timing, looking at when is the best timing, okay, to exit or enter. Okay, so my previous prediction was that property prices would remain low with little or no growth, perhaps in a marginal 0 to 1 point something percent. Okay, many developers would be eager to sell and perhaps also cautious. Okay, quite cautious of how market sentiments and in terms of their land bidding. Okay, government is still looking at limiting supply, still quite limited, I would say. Okay, and land costs likely should be maintained. Okay, with that. Okay, next period, we're looking at the GST hike perhaps to happen in 2022. Okay, with that, developers' costs will already be impacted. It will already go up. Okay, it will affect construction costs. And with Thomson East Coast Line up and creating positivity, okay, it may also affect land costs because that may mean, land costs may increase as well. And all these add on to developer costs, which then flows down to the selling cost of land. Okay, so with higher costs, property price growth, I should expect it to go up slightly to perhaps about 2 to 3%. And I tend to be a little bit more cautious here. Okay, some analysts even predict much higher, but I tend to be a bit more conservative giving my predictions. Okay, the next stage would be with better infrastructure. Okay, you can see with all the TEL lines up, that's massive infrastructure that is already being ready in place. You have more housing supply ready as well with more completed units. I would predict the immigration policy to lighten at this point. Okay, number one, they have been keeping it quite tight. Okay, of course, because of all the protests, so on and so forth. Okay, but at some point or other, they have to lighten it. Okay, because Singapore, we are not a resource-rich country. We don't have much land. We don't have much commodities. Okay, we are heavily dependent on a very open economy and our human capital. So we really need this talent in order to level of GDP. And this was mentioned in the population white paper. Okay, so with that in mind, again, moving forward, prices may be pushed up by these foreign buyers coming in. Okay, as well as local investors tapping on the rental demand created by this pool of buyers. And as a result of the lightened immigration policy, property price growth may now be near 10% annually. Okay, may sound a lot, but it's still lower than the 15% annually that it saw in 2010 to 2013. Okay, so with all this in mind, a bit of content to digest, but then we will ask, so when is the best time to buy? And my prediction pre-COVID was that right now would be the best time to buy, because market being generally quite soft, okay, sentiments being generally quite cautious, people are not really entering in at this point. So when people are not buying, that's the best time to buy, okay? And of course, a few more factors which I'll share later. Okay, then going forward, during this period, okay, would be a good time to buy. Okay, you see over here, during this period, should be a good time to buy. Not the best, but still good. Okay, same for this period over here, 05 to 25 to 27. Okay, finally, this last period, if you see my cursor over here, okay, many will still buy. They will still buy, but they may have already missed the boat. Okay, and this scenario happens very often, in fact, because just like the previous crisis, okay, I will share a little bit more later why I say this, but in other words, many will still buy, but would have already missed the boat. Okay, so that's the 10 years timeline that I was sharing, and I think I would like to look in 2020 itself, this whole post-COVID. So what are we looking at? Okay, let's take a look. Now, I think all of us are looking forward to CV being lifted 1st June, very soon. Okay, I hope nothing changes. And if you take a look at this period, it started in 7 April. Okay, till date, buyers are still buying properties. Okay, in the month of April alone, 277 transactions, new sales took place. And if we minus the first week, okay, if we take sales from the 7th of April, that's when circuit breaker started till date, we have clocked in almost 100 units of project sales. Okay, which means with show flats not being open, viewings only be able to done virtually. Okay, transactions only being able to be done the e-way. We are still having this very healthy volume. Of course, it's still impacted. Previous month, we were looking at 600 over units. This month, April, we were looking at close to 300 units. But I would say still encouraging. Okay, which means the underlying demand, the confidence in our economy, and the long-term outlook is still there. Okay, so what happens when CB is lifted? Once CB is lifted, I think the next thing on developers' mind would be that they may try to launch before the 7th month, okay, which happens on 19 August. Of course, sometimes based on past history, even if they are launched in the 7th month itself, it's not an issue because buyers will still buy. But typically, most people, due to auspicious date and all that, they would try to launch before the 7th month. Okay, so we would be looking at this happening. Okay, and 9th August, I think this is when the nation celebrates. And with this, positive sentiments towards the nation's development should develop, because that's the time when, if we look at when they hold the National Day rally, that usually is about 1 to 2 weeks after the National Day itself. And that is when the Prime Minister comes out to talk about going forward, Singapore's long-term outlook, their plans for the future, what they have done, and what we should be looking out for, and the growth that we could expect and be excited about. Okay, so there would generally be positive sentiments at this period. Okay, next of interest, I think, would be this 黄金时段, where Chinese buyers may be out buying on a buying spree. We can see how once you release, it really becomes a tidal wave of buying for them. Typically, they love to buy houses. Okay, so as we approach this 黄金时段, which is their 7 days, 1 week long holiday, their National Day celebrations. Okay, in the period of 1st to 7 October, something to take note of as well. Okay, and in relation to that, this article is a very recent article. Okay, it was published 8 May, which means just out. It states that Hong Kong has lost out on rich people's fresh funds to Singapore. Okay, and most have overwhelmingly chosen Singapore to park their money. And as Asia's rich contemplate where to place their nest eggs, most have chosen Singapore, overwhelmingly so. Okay, so this would impact the demand that we would be looking at coming into the market at that period of time. Okay, so quite a lot of things happening even in 2020 itself. Okay, end of 2020, like I mentioned previously, we're looking for the TEL stage 2 to be completed. This would be really more good news. There will be more media and press release, and people would start to be interested in what's coming up around the new stations. Okay, so once the station is open, you realize that that causes quite a lot of buzz, activity, excitement, and of course that would also end of 2020, okay, we should also be looking at the general election happening. This will really give a vote of confidence for the ruling party as well as the younger leaders that are stepping up. Okay, so really confidence in, with this GE, confidence in the market. They will be making, very identifying all the developments and plans that they will have, okay, and what is in place that they will have in mind for Singapore. So a lot of confidence on that. And in year 2021, next year, TL station stage 3 will be up. And I think I want to look into this. Developers replenishing their land bank, and will that also have see for us a new price level for land costs? Okay, so what do I mean by that? I think there has been quite a lot of talk about when will the next en bloc fever start. Okay, you notice in 2016 to 2018, that was when a lot of developers came into en bloc, because if you look at how to replenish land bank is only really through two ways: through government land sales, which means buying from government, as well as from en bloc. Okay, and developers started to buy land in Shunfuville, Harbourview Gardens, even below this, even before we hit this red line, which is unsold units being below 20,000 mark. Okay, so what do I mean by that? We would be expecting that with government sales remaining low because of limited GLS, okay, and taking an average sale of 9,000 units sold per year, okay, if you look at this orange circle over here, okay, the unsold units should be less than 20,000 in 2021. Okay, even if we take this year, perhaps we may not hit 9,000, maybe less than that, maybe 4,000, 5,000. But even by the end of 2021, we'll be looking at units hitting another low of less than 20,000 unsold. Okay, and which means that the last en bloc cycle, which started 2016 to 2018, most developers would also have sold off most of their units in 2021. So they may have to start replenishing their land bank, and in other words, it may kickstart another cycle of buying at that point of time. So this is something interesting. And if people were asking, when will the next en bloc figure be, this might be something to analyze and look at. Okay, 2022, okay, I would say there's a possible GST hike, okay. There would be money also available from the en bloc, possibly, okay, if based on the analysis just now we looked at, perhaps it's also a possible scenario. And then in 2023, Thomson East Coast Line Stage 4 would be up. Okay, so this is a little bit on the near to mid-term outlook that I would like to just highlight so that it gives some clarity for us going forward what's happening, and I hope to clear some of the clouds, okay. And with that, I also come to my post-COVID prediction. What is going to adjust here? Basically, I would say this part, okay. If you were to ask me when is the best time to buy, I would say, in fact, because of COVID and post-COVID, is an even better time to buy right now. And I took my own advice, okay. Me and my husband, we just bought our semi-D to rebuild this period itself. During the COVID period, we bought it, and it's because I really have 100% confidence in the economic fundamentals of Singapore, as well as the resilience that our property faces and the value that it has, even to the future outlook, the type of value that it can bring me. Okay, so that is what I would like to share, and I really, really do want to emphasize that it is a very, very short window of opportunity. Is later, so really don't miss the boat. Okay, so with that, let me see. Okay, quite on time. So with that, let me take a sip of tea. Okay, I'll be touching on the top real estate mistakes you must avoid now. That's my main topic. And I think one of which in my decade-long plus years in this line, I think many of us in this line, we see a lot of people committing the mistakes of not taking action and believing in myths. Of course, not everyone, definitely not everyone, but I just like to share a bit about this and try to help decode some of these myths. Okay. Okay. I hope you all are enjoying your tea time too, okay, while listening in. Okay, so not taking action, I think a lot of people just choose to stay comfortable, are really, really comfortable where they are. It's not wrong, it's not wrong. I'd just like to perhaps maybe open up a bit more opportunities of what you can look out for, and perhaps maybe from there influence you into maybe taking action, okay? So some maybe choose not to step out of the comfort zone, just staying comfortable is one, okay? And also to procrastinate, okay? So what do I mean by that? Why delay? I'll talk about that later. Okay, some very, very, very common myths, okay? Until today, even my own family must tell me, don't buy 99, you must buy freehold, must buy, only can buy freehold, cannot buy anything else but freehold. Don't get me wrong, I also love freehold, but I would like to present some facts later to perhaps decode this myth, okay? And then we also look into must buy resale. Okay, resale is the best, okay? And also must buy new launch. New launch is really, you must buy new launch, okay? So why? Okay, let's take a look into these topics. Okay, so to stay comfortable, I'm using this case study that I think is quite common. I think we see this very often in our line. Okay, this is actually a real case that I'm sharing. Okay, so Mr. and Mrs. Tan, not the real name, of course, they got their BTO back in 2003. Okay, they were 40 years old and 35 years old back then. Okay, both of them were having stable jobs, good wages. Okay, in the prime. Okay, they had two sons, young, 3 and 4 years old. Okay, when the estate received a cheap MOP 5 years later in 2008, the sons had just started to go to primary school. Mrs. Tan quit her job and became a full-time housewife. Okay, at this point, they did not think of selling. Okay, then in 2013, they realized that their flat could fetch over 100,000. Again, they didn't think of selling as their sons were having PSLE and another just started secondary school. Okay, and then recently in 2018, they became interested to upgrade as their sons had grown up. They felt that a condo with nice facilities would be good for their active sons in terms of well-being, lifestyle. And they were also thinking about what they can leave behind as a legacy for their children. At this point, they were already 55 years old and 50 years old. Okay, so this is a typical formation of a family. Okay, this is what happens when the HDB reaches MOP. Okay, just before the HDB starts to age, and the next stage will be when you finally realize that you should act earlier. Okay, so what do I mean by this? Let's look a bit more into detail. I'm giving you the exact example, okay, just so that you can put things in perspective. And again, I think your Huttons agent will be able to share more with you, to share with you more price trends, and from there, maybe can look into what you could do. Okay, so for Mr. and Mrs. Tan's block, if they had upgraded in 2008, you can see here, okay, using the average 4,700 per square meter for the HDB in this estate, okay, they would have sold at 517K. Okay, if we use 600 per square foot and 1,250 square feet, I'm basically using the typical OCR average per square foot as well as the typical size back then, okay, to do a calculation of how much their new home would have cost if they had bought at this 2008 period. Okay, the cost of upgrade for them would have been $233, okay, based on this difference of selling and buying. Okay, the cost of upgrade would have been 233. Okay, next we look at 2013. Okay, using 7,500 per square meter average selling price of their HDB block then, they could have sold at 825K. Okay, and using a typical OCR per square foot of 1,000, and the sizes then already were starting to be more efficient. Okay, I'm being very, very realistic. Okay, instead of keeping it at 1,002, I'm now looking at maybe 1,100 square feet for a three-bedder. Okay, their new home would cost 1.1 million, and the cost of upgrade would have increased, okay, by 42K based on the previous cost of upgrade of 233K. Okay, I hope you can follow me thus far. Okay, next, they only upgraded in 2018. So if we look at this point of time, they sold at 6,728 per square meters at a quantum of 740K. So the interesting thing to note was that they could have actually sold earlier. For example, even in 2008 or 2013. Okay, if they had sold in 2013, they would actually have made more profit from the HDB at 825. Okay, but even at 740, they still make. Yeah, but if we look at using 1,250 per square foot for the average OCR at this point of time, for 1,000 square feet, now I made it even slightly more efficient. Okay, that's the type of 3-bedroom size that we're looking at. Their new home would have cost 1.25 million, and the cost of upgrade, in fact, almost doubled. Okay, if you look over here, 510K, the cost of upgrade is now 277K more than if they had upgraded in 2008. Okay, so this is a very interesting case study, and something to really think about. Is it really ideal to stay comfortable? There's nothing wrong with staying comfortable. Of course, really it's all a personal choice. But would it be the best choice for you and your family? That's something to think about. Okay. Okay. Next would be procrastinate. Okay, procrastinate meaning you may have a desire, you may want to upgrade, you may want to have a better lifestyle, you may want to buy something right now. Okay, but when it is down to making a decision, you avoid making that commitment. Okay, there are many reasons for that. Okay, largely is due to fear. Okay, fear of the unknown, scared of what will happen. Okay, my advice is, with all the known information that you have, market is really very transparent now. Okay, there are many real estate professionals. Your Huttons agent can really break it down for you and do many research and analysis to show you what is the best decision to make based on a calculated risk. Really, trust me, make a firm decision. My own personal experience when I started to my own investment journey more than 10 years ago, I could have hesitated. Lucky my husband more firm. So he really said, just go for this. You can't find the best. Okay, there are many buys. You just have to make a firm decision, buy, move on, go, and then repeat this cycle. So you just have to really have the guts to make a firm decision. Okay, your own decision, okay, your own calculated decision. No, don't need to listen to other people's decision because this is your decision. Okay, if you need to listen to the advice from professionals, that's my advice, my own humble advice. Okay. And also people are scared to lose. Okay, I think this is very common. I myself also fall into this. Okay, are prices going to fall any further? Okay, we're constantly chasing the rock bottom. It's very common. We're constantly chasing, is it really the best? Or is it going to bottom out even more? Is it coming in at really the most rock? Okay, but proven time and time again, chances are that you will miss the rock bottom and in fact the entire window of opportunity altogether if you don't act. I actually know a friend of mine, okay, back in 2009. Frankly, back in 2009, you buy anything, you should make one. Okay, but he went around looking at a lot of properties, really looking to buy. Look, and never buy, okay, because was kept feeling that, he really wanted to time it such that he would buy at the really rock, okay, and until today, still haven't buy. Still chasing that rock bottom. Okay, so really, don't avoid. Okay, when it comes down to it, make a firm decision. Okay, and a lot of times people also mistake a low with a high. Okay, so for people like him or maybe it's not uncommon. They are always caught in the trap of the past, thinking of prices 10 years ago, like, oh, I could have bought 10 years ago. I missed it. Okay, today now prices are so high. Shouldn't buy lah. And then again, after they miss this round, 10 years later, they'll look back, I could have bought 10 years ago. Okay, so mistaking a low with a high is really something not uncommon. And I would like to highlight that this is a very common real estate mistake that I would like that we identify not okay last year who have tuned in. Okay. No offense, please. Just sharing also of what we see, and hopefully it can help you in your real estate making a best decision. Okay, so now I'm actually going to go into point by point, okay, the myths, and try to share some statistics and decode these myths for you. Okay, so I would like to go into a bit of my own personal sharing on why we must buy freehold. Okay. Okay, so back in 2009, that was the crisis period, okay, the global financial crisis. My family actually felt that it was a good time to make use of the crisis to invest in the property, okay, because prices had adjusted very attractively. And after some fact finding and analysis, we suggested them to buy a 3-bedroom at a 99 years leasehold new launch near the MRT in District 19. Okay, that was we after doing all our research, we narrowed in and we felt that this is a very, very good top choice. Okay, and we recommended them strongly to buy this. Okay, and back then it was selling at an average of 600 over per square foot. In fact, before the crisis kicked in, it was selling at $900 over per square foot. So it had already adjusted. And so we felt it was very, very attractive to come in. It's a very good value buy. Okay. However, my family was strongly advised by everyone, their friends, their relatives, their Tai Chi friends. A lot of people strongly advise them, don't buy 99. Okay, if you must go for the freehold one, do not buy 99. So in the end, with all this, they were influenced that they must buy freehold. It's either that or nothing. So they bought a freehold 2-bedroom new launch at D9. Walking distance to MRT, also a good location. It had also had a good price of 1150 per square foot. Before the crisis, it was selling at 16xx per square foot. Okay, but when we were doing our studies, we still felt that the first choice would have been better. Okay, so if it were you, which would you think would be the better choice? Okay, due to sensitivity, I actually blocked out the projects because sensitive lah. Okay, but I will still share the actual facts of this. Okay, so the 99 years, you can see both and the freehold, they both completed at the same time. Okay, in fact, the 99 years saw a capital gain, if you see this box over here, of 3.4% per annum, whereas the freehold saw a capital gain of 0.7%. So that's almost 5 times more. Okay, what type of profit would they have seen if they had done otherwise? Okay, let's look at it. Okay, so from this graph, the quantum is generally the same. Okay, so we could have bought a 3-bedroom larger unit at a lower per square foot at 811,000. That was at 650 per square foot, 1249 square feet. And in the end, due to all the influence they had, they went for the freehold 2-bedroom 764 square feet instead at 1150 per square foot. And so it was purchased at 878,600. Okay, today. Okay, haven't sold it yet. Okay, we could have sold it earlier. Okay, let's talk about today if they would choose to sell it. Okay, this 3-bedroom 99 years is estimated 1,003 per square foot. You can see over here. Okay, this is the 99 years leasehold one. It's at 1,003. It would fetch 1.6 million. Okay, and the 2-bedroom freehold, which is over here, you can see at 1,600 per square foot. Price, market value, it would transact at 1.222 million. Okay, so what are the figures that we're looking at? If we were to sell today the unit that my family has, it would make a profit of 450 per square foot. So there is still a gain, okay, and a profit of, in terms of quantum, 343,000. Okay, how about the 99 years? The profit would have been $650 per square foot and a quantum of 811,000. In other words, more than double the profit. Okay, so I'd just like to share that there's nothing wrong with freehold. Okay, I'd just like to say that if it really depends on what you need. Okay, if it is for stay, then by all means go for something that you really feel comfortable, that you really love. But if it is for investment, then if they had opened up their options to 99 back then, would it have been a better choice for them? Okay, think about it. Okay, they would have had more than double the profit back then. Okay, so this is just something that I want to share, that it is really a myth. It is not, it is certainly not a must, okay, that you must buy a freehold. Okay, that is just what I would like you to have a takeaway from today. Okay, you can definitely, all good, there is a premium to it, it's a forever yours, but again, it is certainly not a must to have. Okay, so it depends on your objective. Okay, so now I move on to, and I think it's quite an interesting topic. Buyers usually we always have a very interesting dialogue and debate on this, but your Huttons agent will be able to share more with you on this topic and really go and look into the price trends. Okay, I will also be looking into two more topics that I think are very interesting. Okay, another myth is that you must buy resale. Okay, you must buy resale. Okay, it's much better than buying a new launch. Okay, okay, let's look into this topic. Okay, I'm not sure if you all find this familiar. Coco Palms actually launched in 2014 as a new launch. It came into the market back then at the average of 1050 per square foot. Okay, some buyers opted to buy Livia, which is in the same location. Okay, it's a resale, thinking that it's cheaper and bigger. Okay, so what do I mean? Okay, Livia resale at that point of time, when Coco Palms was a new launch, was 925 per square foot at a quantum of 1164. Okay, 1.1 over million. Okay, that was for a 3-bedroom at 1259 square feet. Okay, so the new launch in comparison at that time, Coco Palms, is a 3-bedroom, slightly smaller in size, 1098 because of the efficiency, at a slightly higher per square foot, 1050, but at a lower quantum. So in fact, it was actually cheaper for a new launch, okay, at the lower quantum. Okay, so where am I leading to? Okay, take a look at this graph. Okay, it is natural, okay, because all things new, is very natural for new launches to have a higher price per square foot. Okay, of course, in fact, some new launches, if you look at it today, some may even be similar price as resale. That is when it's really, really good. Okay, that's a really, really, I would say, an undervalued, very good opportunity. Okay, speak more to your Huttons agent about that. Okay, so in general, resale usually reaches a stagnant price level. Okay, usually it stagnates, it plateaus, and then maybe it starts to see a downward trend. Okay, so if you take a look at this orange line, that's Livia, you notice not only did it hit the stagnant price level, it's already starting to show a downward trend. Okay, so new launch, on the other hand, usually appreciates. Okay, why? If you look at Coco Palms, okay, you can see it appreciated from the time it launched till now, $300 per square foot. Whereas Livia, from the time Coco Palms launched and people bought Livia, it actually transacted looking at a loss. Okay, so if you notice, Livia is in fact now on a downward trend. Then I would like to just share this interesting this fact. Okay, imagine that you were a buyer for Livia. You bought at first hand from developer at $600 per square foot. Okay, and then you bought it second hand on the resale market versus maybe, okay, buyer A bought first hand, buyer B bought second hand. They bought at maybe $900. Okay, at this point of time, you can see about 900 to maybe some over 1,000. If you were to sell, if you were the first buyer and you were to sell at 800, you would still make a profit. Okay, but if you were the buyer B who bought over here, you bought at 900 and you were to sell at 800, that's when you will be transacting at a loss. So in fact, it places, buyer B is placed at a more disadvantage over buyer A. Okay, so that's something for you to digest. Okay, so then I'm going to move on to the next myth, which is why people always also say you must buy new launch. Okay, I would like to talk about it really objectively. Today, I'm just here not to push that for a particular thing, okay, or not to push for a particular project. I'm just here to objectively share, and from there you can really reevaluate on what is the best decision for you. Okay, there's no alternate right, no alternate wrong. Okay, so again, all these are my personal opinions, and I hope it helps you in reviewing on your next purchase. Okay, so in fact, if you ask me, not all new launches are good buys. Okay, why? Sometimes, it may be priced very bullishly, okay, or it may also be due to weaker product attributes that may not uphold its value as well. Okay, so if we look in another two projects, okay, one resale and one a new launch, okay, again, due to sensitivity, I blanked it out, okay. So let's take a look at this. Okay, so the 99 year is actually a resale that completed in 2006, and the 2000 is the free new launch that completed in 2012. Okay, you notice the new launch actually has a negative capital gain versus the other one that has a positive capital gain. So take a look at this graph. Okay, I've put in so that it's more comprehensive and easy for you to see. Let's digest it a bit. Okay, so the orange line is actually the new launch. Okay, so if you had bought during launch time, okay, sometimes you may see launches that perhaps are that may be priced maybe above a fair market value. Okay, so this was one such launch. Okay, they priced pretty bullishly. Okay, and after launch, you notice that instead of making, it actually fell. Okay, you can see from here to here, it actually fell. Okay, versus the 99 years leasehold that if they had bought during launch, okay, they actually saw an appreciation for 8 years upon completion. So there was a appreciation, okay, across a span of 8 years. Okay, more or less, then it starts to stagnate, kind of plateaus out. Okay, so this is what I'm trying to share. It's still important to assess the entry price. Okay, you still have to be selective. Okay, and that's where professional advice is really something that you should look out for. You really have to be selective. You have to assess the entry price, look out for the right attributes also. Product attributes for new launches are also very important. Okay, and all this you really have to, there's a lot of things in mind. It's not just one factor, it's a whole package of factors that will determine how good it is to enter, how good it is, and how easy it is for you to exit. Okay, so this is something I think I would like to share as well. Okay, not necessarily that you must buy new launch, but it also has to be selective. Okay, so objectively speaking, okay, I would like to give some tips to assess the entry price and product attributes. Okay, so entry price, I think, is determined by a few factors, and one of them being the land cost, which is the fixed cost. Okay, and the estimated construction cost typically is about $350 per square foot. Okay, other miscellaneous costs, there's a lot, because now even rebuilding my house, wow, it's really no joke. Okay, even at $400 over per square foot, I may not even be able to get everything I want. And other costs add in is your architectural costs, architecture fee, okay, your engineering fees, your GSTs, okay, over here would be like marketing and all this. Okay, so let's take that as 15% as an estimate. Again, this is just an estimate, just a guide for you, okay. The exact, okay, that is a different matter, but based on this, it gives you a good guide. Okay, so A plus 15, so your break-even cost plus 15, that will give the estimated selling price. And from here, if we compare the actual selling price, that will give us an idea whether this is good or not to enter. Okay, so product attributes are also something that you should look into. Okay, location, scale of and character of the product, the interior layouts, the view, and the developer. Okay, all this will determine the type of value that this development will have. Okay, again, if you're looking for stay, is very subjective. It's really down to your preference. Okay, otherwise, these are things that you should look into. Okay, when buying, especially for investment. Okay, so I'm taking this as an example, and for those of you who recognize this image, this is actually Sterling Residences. The land cost for this was 1050 per square foot. Okay, so if we take average 350 and we plus the 15%, we're looking at a break even of about 1600 plus per square foot, and the estimated selling price of 1850 per square foot. Okay, today it has already, out of 1,000 units, it has already sold a lot. Okay, I think left with the last 300, but with still many choice units. Okay, there are 2 bedrooms available right now. In fact, this is a level 20. Okay, and I just want to share again, for estimated selling price, usually you're looking at perhaps the price or the PSF of a 3-bedroom. Okay, usually 1 bedrooms and 2 bedrooms, they usually do fetch slightly higher per square foot for the smaller unit types. So for a 2-bedroom here, okay, a very, very high floor, 20th level, at 1817, which is below its estimated selling price, I would say this is a very good assessment of one such good buy in the market. Okay, and product attributes wise, if you look at it, so we have touched on price. Okay, location. Okay, this one is just 3 minutes walk to Queenstown MRT. You have a wet market, a lot of food centers nearby. Okay, the scale of the development is big. So you have very, very well designed and very, very good full condo facilities. Okay, many pools within the development, many communal spaces. There's very unique characteristics about it. There are sky terraces in between. And all this, why is important? It determines, for example, if you're renting out, oh, you have more facilities for tenants to enjoy, so on and so forth, okay? And of course, buyers who buy for stay, they love the look of the development. It also helps to increase the demand for it. So all this also determines how strong a product is. Okay, then interior layouts, of course, when we look at layouts, we look at functionality, we look at efficiency, we look at a usage of space, very little wastage, so on and so forth. Okay, so for this very functional, very efficient layouts, okay. And then the views. I think this is something that majority of the units here have really good views, either towards Bukit Timah Hills or unblocked landed views. So this is something that this also has. And developers are also very important. And for this, it's a very award-winning developer. It's by Nanshan and Logan, and they have a very, very good track record and many projects that have been out in the market already, established developers and award-winning. So these are the attributes that I would recommend you to checklist when you're making your real estate purchase. Okay, and definitely these are things that can be assessed with your Huttons agent, because we are all trained and specialized in looking out for all this and recommending accordingly to your preference. Okay, so I'm using Sterling Residences here as an example. Of course, there are still many, many other good buys around. Do remember to check all these out with your Huttons agent. Okay, I would say that there are many, many good buys. Don't miss it, but there's a inventory that is really depleting. Okay, all these are existing stock in the market that sooner or later it will run out. Transacted all at old prices. It's really good products selling out very soon. Okay, but there is still units here that you can buy at really good prices. Okay, so with this, okay, I think I have covered. Let me see my time. Okay, perfect. More or less on time. Okay, so not taking action. Okay, I've covered basically just wanting to stay comfortable, or wanting to buy but delaying. Okay, take action. My advice is really take action. I really hope that you don't miss out. This is a very short window of opportunity, and when it rebounds, you can't catch it. You can't catch up. Okay, it rebounds very sharply. So take action. That's the most important thing I would like you all to have as a takeaway from today's sharing session. Okay, and then myths, I hope I have decoded that it is not necessarily that you must buy freehold. Okay, of course, we have many good freehold products to recommend as well, but it is not necessarily so that it is the best. Okay, so really do look into opening up your options. 99 are really good. My own case, I think the only freehold I bought is my landed. The rest of all my property purchases have been 99. Okay, so just be open about that. Okay, okay. Another one would be that you must buy resale. Resale is not that it's not good, but you really have to take note. When you buy resale, it is already of a certain age. So what type of exit are you looking at? Is it really going to be the best for you? Okay, again, it really depends on yourself. Okay, I'm not saying that cannot, but these are just factors that you could look into. Again, your Huttons agent can better assess and recommend. Okay, and then finally, you must buy new launch. Okay, again, I think it is not always the case that you will see capital gain from it. You really need to assess and be selective, okay, in order to choose the best. Okay, so in summary, and a bit of my own personal advice, my own humble sharing, because I'm sure many of you out there may have multiple and many properties yourself. Okay, so just some of my own sharing. Okay, so today I have already shared on the impact of COVID-19 on the economy and Singapore's property market, my personal prediction on the recovery timeline, as well as how property prices may be in 2020. Okay, and top real estate mistakes that you must avoid. Okay, so finally I will end off with my own humble advice. Start young or start now. Okay, it's never too late to start. It's really never too late. But you really have to just know you have to take action. 长痛不如短痛, some, you know that saying. Okay, start young, I started in 26, today I'm 36, okay, still going to continue on this way to leverage on Singapore property. Okay, so that's my own advice. Leverage on Singapore property to grow your wealth, and really, end of the day, seek professional advice to help you make the best real estate decisions. Sometimes, but look for the professionals. Okay, really. All of us here today, we just want to have your best interest at heart. And I think there are many tools and many price trends, property trends that your Huttons agent, please look back for Huttons agent, can really share with you. And anything that you may have, I'll be looking into some of the questions later. I may not be able to answer all. Please look back for Huttons agent. They will definitely answer you, with the best content and information that you may require. Okay, so thank you very much for attending today's session, and really appreciate the time on your Saturday afternoon to tune in to my session. And a very big thank you, and I hope you have enjoyed and benefited from this session. Okay, PK, over to you, and thank you very much, everybody.
Right. Thank you, Alisa, for your insightful presentation. Reflecting on what Alisa mentioned about the case study just now, I personally feel that sometimes the excuses that we have used to prevent us from asset restructuring all these years could be the same exact time bombs that we plant to haunt us a few years down the road, isn't it? All right, I'm sure that many of us have gained a lot from the information that she just shared. And regardless of whether you are a seasoned investor or maybe someone who is just starting out on your first home purchase, we shall now open up the Q&A session for a few questions, ladies and gentlemen. As mentioned earlier, we want to respect the time and do our best to keep to the schedule. And in case we don't have the chance to answer your questions, please always feel free to check the Huttons agent, who has invited you today for this event. All right, Alisa, over to you with the questions.
Okay, I'm looking at the chats right now. In the interest of time, I will try to answer it the best as I can. Again, we will try to answer all that we can. If we aren't able to answer all your questions, to look back for your Huttons agent. Okay, I do see this question from King Ho Lim. How about the global macro situation? Millions of job losses. Why would Singapore be insulated? Okay, I'll address this question. Definitely, Singapore economy will be affected by job loss as well, and many other issues. Okay. We do have some charts. Perhaps your agent can go through with you later. And as we go on from one crisis to another, we notice that the impact of the crisis, we do tend to be due to many factors. For example, stimulus package that government has rolled out is really very generous across the global landscape. Okay. At the same time, the impact on various countries will also differ. Okay, how they handle the situation, the policies that they implement. I think most importantly, we have to look back at how resilient. Okay, I think the word is resilient. How resilient the country is, and how resilient the country's people are. I think today, our economic fundamentals, our even with the savings that we have, the CPF that we have, Singapore is very resilient and well positioned. Okay, to be resilient to any crisis that we may face. Okay, and in Singapore, cooling measures was brought up to prepare us for crisis like this. Okay, so people are not in debt generally. Okay, because even with TDSR in place, they're generally not in debt. Okay, they are more or less cash rich. Okay, mostly. Okay, country has a lot of new infrastructure and growth coming up. Okay, and for that, I would say Singapore's recovery and its continuous growth is a very likely case that we will see. Okay. Okay, let me look through. Okay, let me look through. Okay. Okay, Ben, I'm the exact person who had purchased Livia at the peak in your chart. There seems no hope for me as I lost a lot of money. If I sold my property today, I will not even get a single cent of cash, as every dollar need to pay. It's indeed painful, but nothing much can be done. So what can I do now? Yes, Ben, I understand. I think in fact, you're not a one-off case. Many people may be in the same situation as you. Again, I'm back to the fact of, in fact, it's the same for HDB buyers as well. Sometimes people buy HDB in the resale market and they realize when they want to sell, they may end up incurring a loss, okay? So it really depends on your situation. I think that your Huttons agent will best be able to help you to see how to minimize this loss and help you sell at the best possible price, exit at the best possible price. And then from there, I think it's maybe good for you to re-enter and see how to cover back all your losses, yeah? And to answer your question, which perhaps many would also have, you need to ask whether there's any growth that you may be expecting. Okay, sometimes the surrounding, there may be some growth factors that may help push up, that may help pull up the prices. Okay, so all these redevelopments, plans or growth prospects may help influence the prices as well. Okay, something to look for if you thinking whether to sell or not. Okay, and if not, then are you happy to continue to stay there? I think that's one question you could ask. Ultimately, if it's for stay, it really boils down to the well-being. If not, then I would think it's quite good to reassess and see what's the best plan for you moving forward. Okay. Let me see. I think I may have only time to maybe take one last question. But don't worry, okay, don't worry. Your Huttons agent will be well equipped to answer any questions that you may have. Okay. Okay, I think there's a question. There's a question from Kwan Yu, okay? The case studies, all of them refer to private housing and does not include HDBs. Hi, Kwan Yu. Yeah, good to hear from you. In fact, if you did remember, I pulled out a case study on Mr. and Mrs. Tan. Theirs was a typical case study of someone who bought a HDB, okay? In fact, started off with a BTO, and I think that's a very, very common case study and example. So we did bring this up, and I think our previous speakers, and in fact going forward, I think in today's market, you do hear some articles talking about HDB as a depreciating asset, right? So there really is quite a good timeline that you may want to take note of for HDB. Again, when is the stagnation point, when is the peak, and when you should best sell. Okay, so we did show on HDB just to address your that point. Again, your Huttons agent can show you about HDB. It's really that it is, I mean, based on facts and stats, okay, this is not opinion. They do tend to see a downward trend after a period of time. Okay, okay. I'm so sorry because it's already 4:10 and I don't wish to take up your time. So for the interest of time, I don't. Yeah, I think I will stop over here. Thanks again, very, very thankful to have all of you listening in and tuning in. And do look back for your Huttons agent for professional advice. I think this period is really the best time to touch base, reassess, and maybe see how to better move forward from here. Again, I think 危机, I like this term, 你有危险就有机会. Okay, so it's a very, very good time that we can turn crisis into opportunity for all of us. Okay, thank you everybody, and back to you, PK.